Joe Cusick of Cusick Advisors joins us now for Stocking Up. Good to have you here,
Thank
as
you,
always,
Angie.
and you're bringing us the bull and bear report. So
Yes.
let's start with Coca-Cola. Bullish or bearish on the stock?
You know what, Coke? It was interesting. Yesterday, I was watching it, coming back from vacation. Yes, I have a tan, but
So proud.
one thing I saw about Coke is that there was actually some bullish activity. Now, it was short-term bullish, so investors don't get all excited. And plus the fact with the market having this volatility that we've seen over the last couple of days, the bottom line is that quite often, especially with the uncertainty, you'll see Coke as a name that gets some traction. But I haven't seen it on the stock side. But the options, there was a big bullish trade. 7,700 of the $46.50 calls traded for 81 cents. Now, the expiration is on 4/22. Why is that interesting? It's because they have earnings on the 20th.
Oh.
So this seems that there is a bullish short-term play on earnings. And I wanted to point this out for your viewers because this is how someone who wants to trade Coke with the stock trading at right around 46.76, you're trading an at-the-money option. It gives you a couple days into the earnings cycle. And this is a real interesting trade. It's a big volume, and so the bottom line is that, and we love being on the trading floor.
Of course we love it.
You know, always something going on.
Exactly.
You see that they're using a limited risk type of opportunity for getting a potential nice upside if Coke does go to the upside. And we want to, and this particular trader is looking for the stock to go well above that 47.5 level. So that seems to be a pretty decent move right now in Coke.
And next on your list is Goodyear Tire. I'm assuming you're bearish on this one?
You know what? The fundamentals might not necessarily say bearish right now, but when I saw this trade, it looks definitely like someone is anticipating for some potential bearish opportunities. The reason why I say that, Ange, is because there was 2,200 of the $27 puts. Now, the stock is trading at $31.31.
So somebody thinks from $31, the stock could go down below $27.
Now, you think, though, if you're an options trader, and I know you have a lot of shrewd ones out there, and you have new individuals that are potentially looking at options, paying $1.75 for a $27 put, which is way out of the money, but this is in January of 2017.
Oh, it's a leap. It's a long time.
What's interesting about this play right now is that it looks like it is a hedge. Someone is willing to pay $1.75 of risk premium, so they're going to start to see their protection kick in right around that 25.25 level. Which is interesting, and the reason why I say that's interesting is that the stock right now is the options, are only pricing in the potential to move in roughly, and with implied volatility where it is today, roughly around a $6 to $7 range between now and January expiration. Now that can change dramatically, but this is a very interesting position. I want to keep an eye on this, especially in consumer names like Goodyear. This is very interesting trade, and I want to keep an eye on that.
What do you think about the overall market action? You talked about that a bit earlier.
Yeah, you know what? Finally, we're seeing volatility.
Is that a good thing?
That is a good thing.
I know you traders love volatility.
Traders love volatility, but this is what's been concerning for me as an investor and someone that works with clients as an advisor. We've seen 100-point swings and no volatility. We see volatility in the teens. That is extremely concerning to me. There's so much uncertainty out there in the world, in our economy. There's headline after headline, and the bottom line is that we don't see volatility going up. As a matter of fact, we've seen it contract. To me, I get a little bit apprehensive when you see these kind of moves, where there were these pockets of both up and down, and we're not seeing volatility. That doesn't make sense to me. So seeing volatility come back in the market yesterday, almost a 10% pop in the VIX, that at least is starting to get some reality, maybe some normalcy. Now, obviously, if you see volatility get over that 20 level, 22, 25, then that's where you start to say, well, we're getting to extremes, but that's concerning me. But right now, I don't like volatility in the teens unless I know that there is fundamental reasons why the market is moving to the upside or has these pockets. I understand why that's happening. It's not happening yet, but seeing more vol right now does give me a little bit of ability to sleep at night a little bit more.
Oh, there's some hope there.
Yes.
Well, thank you so much for your insights, Joe.
Thank you.